This is your market recap for March 19th, 2025. Today we had FOMC at 2 o'clock, which caused us to not trade and also caused the markets to be a little more iffy, I'll say. I'll explain a couple of reasons why. Number one, I expected us to play bullish because it'll be easier to see on the 15, but London was playing bearish and then switched to bullish, right? We were here. It's hard to say. I'll get to it on the 15-minute. But we were playing bullish up, retraced for lunch, took out this low. FOMC was this spike down here, and then we continued up higher, taking out this high and this high. All right, 15-minute. Here we go, 9:30. Market opened, came up, took out this high, gave an immediate rejection, came down. Would have liked to see price sweep this low. If this was not FOMC, I believe that price would have swept this low. Then we played bullish. During the macro, we started the retrace. Ended this retrace around the next macro, continued bullish, and then we enter lunch. So again, the macro for lunch starts the retrace that goes against what was profitable in AM session, targeting this low, which gets hit, and then FOMC is right here, this little dip down there. Then we play bullish from there, coming once again above these highs. And during this macro, after we take out, well, these highs over here, during this macro, we start reversing. Last hour of trading goes for untouched liquidity, which would be sell side liquidity here, which we take right there. Now on the 5-minute, you can see a little better bearish move, bullish move, right? We reversed right there. Market open, spikes up for less than 5 minutes. I mean, a very, very short time frame. Took out that, came all the way down. Again, would have liked to see this sweep, and I do believe that it would have swept if today was not FOMC. It's just the nature of FOMC. Things go a little higher, a little lower than they should. So Exhibit A, Exhibit B, up again, reverse the macro down here. These closures right there. These closures are a little outside of this, but it still plays with the trend and the continuing bullishness. Once again, this retrace below equilibrium, so that's good. Maybe that's why they closed down there. Absolutely not. So I do believe them closing out of this is just FOMC, right? And then we get another bullish move, another 5-minute reaction, expansion up, take out these highs, lunch macro, reverses, takes out. Sell side since AM session was bullish. Algorithm kicks back in, take out the low once, take out the low twice, getting close to FOMC, not much volatility in the market. FOMC hits, they rake it low to get anyone who was long out from here. If they entered here, they're out with this spike down there. And then they rip it in the direction they wanted, which is bullish to continue this move here. So we're up here, just marching, again, 5-minute there. Once again, macro, price reversed, last hour of trading is going to seek untouched liquidity since we just made a new high at 3 o'clock, or around the beginning, first couple of minutes of 3 o'clock, we're seeking sell side, which would be down here. Now, as far as trades go, there's not much today, not many SMTs, which, I don't know, SMTs are interesting because if there's a whole lot of SMTs, you don't want to trade because that just means the market's all over. But if there's not many SMTs, you can't trade. But there was some in AM session. So once again, market opens, we spike above this high over here, just barely. Then we create an SMT like on the 15-second, very short time frame. Play bearish from there. Once again, looking to sweep this low. Doesn't end up happening. We do get an SMT of these lows here. ES never swept this 840 low. So if we then look at ES, we would find an entry long from there. That would have been the trade of the day, in my opinion. So with this SMT, we play bullish, come up, macro. Am I, again, FOMC might mess up some of the timing, but we usually retrace during the macros if the move starts right as market opens. I don't know if the move, in quotes is what I'm doing with my hands right now, I don't know if the move is technically started by this bearish move, right? So in that sense, yes, it started roughly when market opened. But if that doesn't count as the move, this bearish leg, I would have expected the reversal to happen later than the macro. Either way, just something to look out for is if the opposite move, the manipulation counts as the move, again, in air quotes. Macro reverses, a lot of wicks, not much to play there. Like you saw on the 5-minute past equilibrium, into this 5-minute fair value gap here, reacting bullish off that, once again during the macro, play bullish. Lunch takes out this high, continues higher. Lunch macro then reverses us to target these lows here, which we hit as soon as the algorithm opens and resumes. I'm sure people got tripped in long here, and then FOMC happened, and boom, they took everyone out who was long, and then they quickly took everyone out who was short, continuing in its intended direction. Expansion looks like it retraces, yep, perfectly at equilibrium right there. So again here, 1-minute fair value gap there. Expansion, 3 o'clock during this macro. Later, well, last minute of the macro reverses. Down, no SMT. If there was an SMT here, this would have been a good trade, but there wasn't, at least on the lower time frame. And in my opinion, on a higher time frame, like with one of these highs, you'd have no way to know that this right here would be the reason for reversal. So if there's a higher time frame SMT, that helps with the bias, but I'd like a shorter time frame SMT to tell me that the move is actually starting to go there from that point. So another fair value gap here after the macro reverses. Fair value gap pushes us down, taking out this liquidity, and then we kind of just meander off from there. No new highs, no new lows made. So as far as the rest of the week is planned, I like bulls. I like the idea of playing bullish. Just looking for a fair value. I guess we have this one. We respected it to the downside, disrespected it to the upside, and then disrespected it to the downside. We could do another case where we close up and then retrace it. If we look on the week, we're a small weekly candle, which is good in the sense that we could retrace, or sorry, could start the reversal. I don't know, I'm kind of disregarding this, kind of, not really. I think once we close above it, it could be a help. But until then, I'm not going to count on it because this closure in here could easily send us lower, could easily send us higher. So for now, I'm ignoring that. I'm just going with where the market is flowing, right? Failed to take out this high. I don't think ES did. What high is this? I didn't even look. Monday, 2 p.m. Okay, that's an SMT, which isn't the best in my opinion if you're wanting to continue bullish. SMT there might cause a retrace. Is that retrace this? I don't know. Maybe we'll see what overnight does. Again, I say it every time. We'll see what overnight does, but it's the reality. Very, very horizontal market this week. So we could play either direction, in my opinion. This SMT of these highs does make me feel more bearish, but that could 100% just be a retrace move, and we could have already done it, right? Because we're heading bullish now. We'll see if we end up taking out this high overnight, which I doubt, or overnight will do something. So Asian session and London session will do something that makes me want to play bullish anyways. So it's all about reacting to what is in the market at the time. And at this time, I don't have enough to make a solid, um, I'll say a good guess about where market will go tomorrow. But best bet, once I wake up in the morning, I'm going to look at London session, see what it left, see what it did, and then build my bias from there. The rest of the week is tradable. I believe Thursday and Friday both have news that is tradable. And by tradable, I mean the day of the news is tradable. I'm not trading red folder news itself, but I will be looking to enter before and after it. So yeah, again, we'll just see what the market gives us. This has been your market review for March 19th, 2025.